Hello, my auditing theory friends. The time has come for us to talk about audit evidence and audit documentation. So, in the first segment, we did talk about audit objectives. And in the second segment, I didn't notice, but it was quite a lengthy discussion about audit procedures. So, to complete our module, we will now talk about audit evidence and documentation, starting, of course, with the definition of audit evidence. Audit evidence refers to all the information used by the auditor. Take note, it did not say all the information available to the auditor. Rather, it says all the information used by the auditor in arriving at the conclusions on which the audit opinion is based. Our audit evidence may either be accounting records or it may be other information. Sometimes accounting records is called underlying accounting information, and sometimes other information is called corroborating information. Have you noticed how beautiful our story is? We started by reviewing management assertions, and then we said, well, these stories of management need to be evaluated and need to be examined. And so the practitioner comes in, the auditor comes in, and crafts his audit objectives based on the assertions of management. And then the audit objectives led us to the procedures that we will be performing. And these procedures are there to gather evidence. And so here we are, audit evidence. Audit evidence could either be records, accounting records, or other information. So, what are some examples of evidence that will fall under accounting records? Just imagine when we say accounting records or underlying accounting information, these are the records, documents, evidence that serve as the basis for the entries that you make, okay, that eventually make it to the financial statements. So examples, of course, will be your records of initial entries. So these are your journal entries, your supporting records, subsea, ledgers, special journals, checks and records of electronic fund transfers, invoices, contracts, like what we said, general and subsea ledgers, journal entries, other adjustments to the FS that are not reflected in formal journal entries, and records such as worksheets and spreadsheets. So notice the things that we listed under accounting records are those which we use when we actually make no our entries, or when these are records that directly affect the elements of the financial statements that we recognize. Okay. Other information, on the other hand, as its original term implies, corroborating information. So these are information that could help support or refute, okay, the evidence that you have found. So this will help you corroborate. Example will be minutes of meetings. Or take a look at this one, confirmations from third parties. Do you remember when we discussed about confirmation requests and how we send confirmation requests to the customers of the client, right? When the customer reply to the confirmation is not the basis for our journal entry, right? Debiting AR, crediting sales. But the customer reply could help confirm, could help corroborate, okay, if what was reflected in the records is correct or not. Analysts' reports would also be helpful. Benchmark information like comparable data about competitors. Controls manuals, okay, information obtained by the auditor from certain audit procedures, specifically the audit procedures of inquiry, inspection, and observation. Okay, so when we inquire, when we observe, these would corroborate what we have seen in the actual records. Okay, and then other information developed by or available to the auditor. So the idea being that other information could help support, okay, or refute what the information that we have seen or the evidence that we have gathered when we perform the audit. Okay. Now, since the procedures would lead us to the evidence and the evidence become the basis of our opinion, we of course have to make sure that there is proper audit documentation. One favorite line of those in external audit is, if it is not documented, it is not done. If it is not written, it is not done. Oh my, I can't even count how many number of times my audit manager used to tell that to me. So audit documentation is important. Sometimes we call this one the working papers. It's important because these are the records kept by the auditor of the procedures applied, the tests performed, the information obtained, and the pertinent conclusions reached in the engagement. So the working papers serve as our proof of the work we have performed. Okay, so what were the procedures performed? What was the evidence gathered? And what is the conclusion reached? So to summarize, it would be PEC, right? Procedures, performed, evidence gathered, and conclusions reached. Those are the very important components of your working papers. You should be able to see, at the very least, those three things in your working papers. The auditor should prepare the audit documentation so as to enable an experienced auditor having no previous connection to the audit, okay, to reperform what the auditor has done. So that is how detailed, no, the working paper should be. Okay, so let us assume that there is an experienced auditor. So, but this experienced auditor has no connection to the audit. If this auditor reviews or looks at our working paper, that auditor should be able to understand the nature, timing, and extent of the procedures we performed, the results of the significant procedures and the evidence we were able to get, and the significant matters arising during the audit and the conclusions reached. Therefore, if you can imagine, you can't just say in your working papers, you can't just say, I vouch 10 invoices, no exceptions noted. Because can you imagine if there is then again this auditor, experienced but no previous connection to the audit? If he looks at your working paper, will he be able to reperform what you did? If all he sees is vouch 10 invoices, no exceptions noted? Of course not, right? So that is why we need to provide details. And as to the gauge of how much detail we provide, this becomes our rule of thumb. Okay, that an experienced auditor having no previous connection should be able to reperform our work and should be able to come up with the same conclusions as we have. Okay, so we classify our audit documentation into two. There is what we call the permanent file. So permanent file would refer to working papers intended to contain historical or continuing nature, okay, matters of continuing significance to the audit. Examples of items to be included in the permanent file are articles of incorporation because, well, we don't expect articles of incorporation to change every year. Long-term contracts, including those of bonds, which would cover, of course, multiple years, and even internal control documentation. Okay, because we also do not expect internal control systems to change year by year. Maybe the control activities, some of them may be removed, and then the company or the client may add new ones. But in terms of the actual internal control system, we don't expect it to change dramatically or significantly every year. So our internal control documentation also falls into the permanent file. The current file, on the other hand, would refer to working papers that contain evidence gathered, descriptions of audit procedures performed, and conclusions reached relevant to the audit of a particular year. Okay, so whereas permanent files would refer to matters of continuing significance, current file will only be relevant to the particular year. And usually, the current file is arranged in the following order. We have the working trial balance. Actually, if you can remember your very first accounting subject, where perhaps your teacher must have asked you to prepare a worksheet, and in the worksheet we have the unadjusted balances, adjustments, adjusted trial balance, then balance sheet, income statement, right? So that's how a working trial balance would usually look like. So you will start with your working trial balance, then after that you'll have your proposed adjusting and reclassifying entries, and then the lead schedules, and then the supporting schedules. So if, for example, you have as a line item cash and cash equivalents, when you ask for the lead schedules, and you will find there the breakdown of what is inside cash and cash equivalents. And the supporting schedules will, of course, contain more details, such as, for example, the specific bank accounts or the specific account numbers. Okay, so that's the usual arrangement of your current file. Some important working paper elements, but remember we said PEC must be there, procedures performed, evidence obtained, and the conclusions reached. They must be there. But then here are additional working paper elements that we expect to find, okay, in your audit documentation. For example, there should be a heading, and the heading should show the name of the client, the title of the working paper, so we would know what we are looking at, and the date or period of time to which the audited information pertains. Okay, this will help greatly when a review is being done of your work. The dates and initials of the staff and the reviewers, so as to assign accountability for whoever performed and reviewed the particular working paper. Indexing numbers and appropriate cross-referencing to other working papers, such as, for example, you might want to index all that would start with number one to refer to tests done that would affect cash, for example. Okay, so this will help direct, no, or guide whoever will be reviewing and using, and the other members of the team are contributing as well to your working papers. And then tick marks and legends to let us know what you performed, okay, in that particular account or that particular procedure. Tick marks are symbols used to explain the auditor's evidence gathering procedures. Okay, so we are also reminded that in terms of the ownership, the working papers are owned by the auditor. When we say working papers, these include schedules prepared by the client for the auditor. So whatever schedules the client prepares for you is part of your working papers. But this does not include reports given by the auditor to the client. So this would include all inbound, okay, but this will not include outbound, that which we give to the client. Nonetheless, working papers are ours. Okay, the auditor owns the working papers. That is why, in cases, for example, of predecessor successor auditor relationships, and the successor would like to request, okay, to view your working papers, it is not enough that the client approves such request, but the predecessor auditor must approve, okay, in the case of the review of the working papers, because at the end of the day, the working papers are owned by the auditor. Auditors should observe confidentiality even after the end of the audit engagement. So, this is the thing with our fundamental ethical principle of confidentiality. It does not end when the relationship ends. Even when the relationship has already ceased, you must still observe confidentiality. In terms of the assembly of the final audit files, our auditing standards has given us a time frame. We should be able to complete the assembly of the final audit files not more than 60 days from the audit report date. We do recognize that at certain instances, we still need to do some housekeeping of the files in terms, for example, of its assembly, how it is arranged, how it is indexed. But we are reminded that this 60 days from the audit report date, not balance sheet date, not more than 60 days from the audit report date. Whatever you do in terms of documentation for this 60-day period, it should not introduce new procedures, and it should not change, you should not be changing okay, your conclusions, meaning to say this is mainly housekeeping, okay, in nature, because you have already released your audit report. Of course, quality control procedures would be a different thing, okay, but in terms of the assembly, then mainly housekeeping. Retention period, okay, assuming no specific rules or regulations from local authorities, if you look at our PSA, assuming we don't look at the local regulation, it would be 5 years from the audit report date. However, if you go to the Philippine SEC, the Philippine SEC requires a retention period of 10 years. So whenever this is asked in a multiple choice question, for example, determine if the question refers to a particular local regulation. In the case of the Philippines, that would be 10 years. But absent any specific rules or regulations from local authorities, auditing standards would say 5 years from the audit report date. Okay, so there we have it. We have completed this installment. Wow, congratulations, guys. This is now the time for you to take out that sheet of paper and that ball pen and start scribbling down your notes in order to lock in the concepts that you have learned, hopefully, in this lecture series. So thank you so much, and I hope to see you in the next one.